analysis from A to Z. By Stephen B. Achelis. Homepage, www.ntvforex.com. Forex News, www.ntvforex.com News. Preface. Over the last decade I have met many of the top technical analysis gurus, as well as shared experiences with thousands of newcomers. The common element I've discovered among investors who use technical analysis, regardless of their expertise, is the desire to learn more. No single book, nor any collection of books, can provide a complete explanation of technical analysis. Not only is the field too massive, covering everything from Federal Reserve reports to Fibonacci arcs, but it is also evolving so quickly that anything written today becomes incomplete, but not obsolete, tomorrow. Armed with the above knowledge and well aware of the myriad of technical analysis books that are already available, I feel there is a genuine need for a concise book on technical analysis that serves the needs of both the novice and veteran investor. That is what I have strived to create. The first half of this book is for the newcomer. It is an introduction to technical analysis that presents basic concepts and terminology. The second half is a reference that is designed for anyone using technical analysis. It contains concise explanations of numerous technical analysis tools in a reference format. When my father began using technical analysis 30 years ago, many people considered technical analysis just another 1960s adventure into the occult. Today, technical analysis is accepted as a viable analytical approach by most universities and brokerage firms. Rarely are large investments made without reviewing the technical climate. Yet even with its acceptance, the number of people who actually perform technical analysis remains relatively small. It is my hope that this book will increase the awareness and use of technical analysis, and in turn, improve the results of those who practice it. Information is pretty thin stuff, unless mixed with experience. Clarence Day, 1920. Technical Analysis from A to Z. By Stephen B. Achelis. Acknowledgments. The truth that no man is an island certainly holds true here. This book would not be possible without the help of thousands of analysts who have studied the markets and shared their results. To those from whom I have compiled this information, thank you. There are two people who have helped so much that I want to mention them by name. Without John Slauson's editorial and research assistance, this book would not have been published until the next century. And Denise, my wife, who has been an active participant in my work for more than a dozen years. Terminology. For brevity, I use the term security when referring to any tradable financial instrument. This includes stocks, bonds, commodities, futures, indices, mutual funds, options, etc. While I may imply a specific investment product, for example, I may say shares, which implies an equity, these investment concepts will work with any publicly traded financial instrument in which an open market exists. Similarly, I intermix the terms investing and trading. Typically, an investor takes a long-term position while a trader takes a much shorter-term position. In either case, the basic concepts and techniques presented in this book are equally adept. Words are like money. There is nothing so useless, unless when in actual use. Samuel Butler, 1902. Technical Analysis from A to Z. By Stephen B. Achelis. Part 1, Introduction to Technical Analysis. This introduction was written for investors who are new to technical analysis. It presents the basic concepts and terminology in a concise manner. If you are familiar with technical analysis, you will probably find the reference the appropriate starting point. Homepage, www.ntvforex.com. Forex News, www.ntvforex.com News. Technical Analysis. Price fields. Charts. Support and resistance. Trends. Moving averages. Indicators. Market indicators. Line studies. Periodicity. The time element. Conclusion. Technical analysis. Technical analysis. Should I buy today? What will prices be tomorrow, next week, or next year? Wouldn't investing be easy if we knew the answers to these seemingly simple questions? Alas, if you are reading this book in the hope that technical analysis has the answers to these questions, I'm afraid I have to disappoint you early, it doesn't. However, if you are reading this book with the hope that technical analysis will improve your investing, I have good news, it will. Some history. The term technical analysis is a complicated-sounding name for a very basic approach to investing. Simply put, technical analysis is the study of prices, with charts being the primary tool. The roots of modern-day technical analysis stem from the Dow theory, developed around 1900 by Charles Dow, stemming either directly or indirectly from the Dow theory. These roots include such principles as the trending nature of prices, discounting all known information, confirmation and divergence, volume mirroring, changes in price, and support resistance. And of course, the widely followed Dow Jones Industrial Average is a direct offspring of the Dow theory. Charles Dow's contribution to modern-day technical analysis cannot be understated. His focus on the basics of security price movement gave rise to a completely new method of analyzing the markets. Technical Analysis from A to Z. By Stephen B. Achelis. A human element. The price of a security represents a consensus. It is the price at which one person agrees to buy and another agrees to sell. The price at which an investor is willing to buy or sell depends primarily on his expectations. If he expects the security's price to rise, he will buy it. If the investor expects the price to fall, he will sell it. These simple statements are the cause of a major challenge in forecasting security prices, because they refer to human expectations. As we all know firsthand, humans are not easily quantifiable nor predictable. This fact alone will keep any mechanical trading system from working consistently. Because humans are involved, I am sure that much of the world's investment decisions are based on irrelevant criteria. Our relationships with our family, our neighbors, our employer, the traffic, our income, and our previous success and failures all influence our confidence, expectations, and decisions. Security prices are determined by money managers and home managers, students and strikers, doctors and dog catchers, lawyers and landscapers, and the wealthy and the wanting. This breadth of market participants guarantees an element of unpredictability and excitement. Fundamental analysis. If we were all totally logical and could separate our emotions from our investment decisions, then, fundamental analysis, the determination of price based on future earnings, would work magnificently. And since we would all have the same completely logical expectations, prices would only change when quarterly reports or relevant news was released. Investors would seek overlooked fundamental data in an effort to find undervalued securities. The hotly debated efficient market theory states that security prices represent everything that is known about the security at a given moment. This theory concludes that it is impossible to forecast prices, since prices already reflect everything that is currently known about the security. The future can be found in the past. If prices are based on investor expectations, then knowing what a security should sell for, that is, fundamental analysis, becomes less important than knowing what other investors expect it to sell for. That's not to say that knowing what a security should sell for isn't important, it is. But there is usually a fairly strong consensus of a stock's future earnings that the average investor cannot disprove. I believe the future is only the past again, entered through another gate. Sir Arthur Wing Pinero, 1893. Technical Analysis from A to Z. By Stephen B. Achelis. Technical analysis is the process of analyzing a security's historical prices in an effort to determine probable future prices. This is done by comparing current price action, that is, current expectations with comparable historical price action to predict a reasonable outcome. The devout technician might define this process as the fact that history repeats itself, while others would suffice to say that we should learn from the past. The roulette wheel. In my experience, only a minority of technicians can consistently and accurately determine future prices. However, even if you are unable to accurately forecast prices, technical analysis can be used to consistently reduce your risks and improve your profits. The best analogy I can find on how technical analysis can improve your investing is a roulette wheel. I use this analogy with reservation, as gamblers have very little control. When compared to investors, although considering the actions of many investors, gambling may be a very appropriate analogy. There are 2 times in a man's life when he should not speculate: when he can't afford it, and when he can. Mark Twain, 1897. A casino makes money on a roulette wheel, not by knowing what number will come up next, but by slightly improving their odds with the addition of a 0 and 00. Similarly, when an investor purchases a security, he doesn't know that its price will rise. But if he buys a stock when it is in a rising trend, after a minor sell-off, and when interest rates are falling, he will have improved his odds of making a profit. That's not gambling, it's intelligence. Yet many investors buy securities without attempting to control the odds. Contrary to popular belief, you do not need to know what a security's price will be in the future to make money. Your goal should simply be to improve the odds of making profitable trades. Even if your analysis is as simple as determining the long, intermediate and short-term trends of the security, you will have gained an edge that you would not have without technical analysis. Consider the chart of Merck in Figure 1, where the trend is obviously down and there is no sign of a reversal. While the company may have great earnings prospects and fundamentals, it just doesn't make sense to buy the security until there is some technical evidence in the price that this trend is changing. Technical Analysis from A to Z by Stephen B. Achelis. Figure 1. Automated trading. If we accept the fact that human emotions and expectations play a role in security pricing, we should also admit that our emotions play a role in our decision-making. Many investors try to remove their emotions from their investing by using computers to make decisions for them. The concept of a HAL, the intelligent computer in the movie 2001, is appealing. Mechanical trading systems can help us remove our emotions from our decisions. Computer testing is also useful to determine what has happened historically under various conditions and to help us optimize our trading techniques. Yet since we are analyzing a less than logical subject, human emotions and expectations, we must be careful that our mechanical systems don't mislead us into thinking that we are analyzing a logical entity. That is not to say that computers aren't wonderful technical analysis tools. They are indispensable. In my totally biased opinion, technical analysis software has done more to level the playing field for the average investor than any other non-regulatory event. But as a provider of technical analysis tools, I caution you not to let the software lull you into believing markets are as logical and predictable as the computer you use to analyze them. Technical Analysis from A to Z by Stephen B. Achelis. Price fields. Price fields technical analysis is based almost entirely on the analysis of price and volume. The fields which define a security's price and volume are explained below. Open. This is the price of the first trade for the period, for example, the first trade of the day. When analyzing daily data, the open is especially important as it is the consensus price. After all interested parties were able to sleep on it. This is the highest price that the security traded during the period. It is the point at which there were more sellers than buyers, that is, there are always sellers willing to sell at higher prices, but the high represents the highest price buyers were willing to pay. Low. This is the lowest price that the security traded during the period. It is the point at which there were more buyers than sellers, that is, there are always buyers willing to buy at lower prices, but the low represents the lowest price sellers were willing to accept. Close, this is the last price that the security traded during the period. Due to its availability, the close is the most often used price for analysis. The relationship between the open, the first price, and the close, the last price, are considered significant by most technicians. This relationship is emphasized in candlestick charts. Volume, this is the number of shares or contracts that were traded during the period. The relationship between prices and volume, for example, increasing prices accompanied with increasing volume, is important. Open interest, this is the total number of outstanding contracts, that is, those that have not been exercised, closed, or expired, of a future or option. Open interest is often used as an indicator. Bid, this is the price a market maker is willing to pay for a security, that is, the price you will receive if you sell. Ask, this is the price a market maker is willing to accept, that is, the price you will pay to buy the security. These simple fields are used to create literally hundreds of technical tools that study price relationships, trends, patterns, etc. Technical analysis from A to Z. By Stephen B. Achelis. Not all of these price fields are available for all security types, and many quote providers publish only a subset of these. Table 1 shows the typical fields that are reported for several security types. Table 1. Futures, mutual funds, stocks. Options: open yes, no, often yes, high yes, closed end, yes yes, low, yes closed end, yes, yes close, yes, yes nav, yes yes, volume yes, closed end, yes yes, NA, N often, open interest yes, bid, intraday, closed end, intraday ask, intraday, closed ends, intraday. Net asset value, technical analysis from A to Z. By Stephen B. Achelis. Charts. Charts, the foundation of technical analysis is a chart. In this case, a picture truly is worth 1,000 words. Line charts. A line chart is the simplest type of chart. As shown in the chart of General Motors in Figure 2, the single line represents the security's closing price on each day. Dates are displayed along the bottom of the chart and prices are displayed on the sides. Figure 2. A line chart's strength comes from its simplicity. It provides an uncluttered, easy to understand view of a security's price. Line charts are typically displayed using a security's closing prices. Bar charts. A bar chart displays a security's open, if available, high, low, and closing prices. Bar charts are the most popular type of security chart. As illustrated in the bar chart in Figure 3, the top of each vertical bar represents the highest price that the security traded during the period, and the bottom of the bar represents the lowest price that it traded. A closing tick is displayed on the right side of the bar to designate the last price that the security traded. If opening prices are available, they are signified by a tick on the left side of the bar. Technical analysis from A to Z. By Stephen B. Achelis. Figure 3. Volume bar chart. Volume is usually displayed as a bar graph at the bottom of the chart. See Figure 4. Most analysts only monitor the relative level of volume, and as such, a volume scale is often not displayed. Figure 4. Figure 4 displays zero-based volume. This means the bottom of each volume bar represents the value of 0. However, most analysts prefer to see volume that is relative adjusted rather than zero-based. This is done by subtracting the lowest volume that occurred during the period displayed from all of the volume bars. Relative adjusted volume bars make it easier to see trends in volume by ignoring the minimum daily volume. Technical analysis from A to Z. By Stephen B. Achelis. Figure 5. Figure 5 displays the same volume information as in the previous chart, but this volume is relative adjusted. Other chart types. Security prices can also be displayed using other types of charts, such as candlestick, equivolume, point and figure, etc. For brevity's sake, explanations of these charting methods appear only in Part 2. Technical Analysis from A to Z. By Stephen B. Achelis. Support and Resistance. Support and resistance. Think of security prices as the result of a head-to-head battle between a bull, the buyer, and a bear, the seller. The bulls push prices higher, and the bears push prices lower. The direction prices actually move reveals who is winning the battle.